Okay, so we're looking at inventory valuation. Last in, first out, where the goods that come in last will be sold first. So we've been given information here. Imports, sales and imports here, the quantities and the total amounts. So the first thing that we need to get is the price per unit, because that's information is going to be needed in our stores ledger for the last in, first out. So for these imports, which were 200, the total cost was 175,000. The price per unit, we just divide the amount by the quantity. So 175,000 divided by 200. Someone try to join. 175,000 divided by 200. That's 875 kwacha per unit. All right. So we'll put this information in our stores ledger. Imports is the same as purchases. All right. Usually in this type of questions, it's purchases, but imports is also the same thing. So in the stores ledger, you have three main sections for the imports, the sales, and the balance. Then you also have your dates here. So on the 2nd May, we purchased 200 goods. So quantity here, you put 200. Each of these costed 875 kwacha, and we paid a total of 175,000. And one thing you have to note with this question, there was no opening inventory. If there was opening inventory, we would have put it here in the balance. Right? Would have started on this balance section with the opening inventory. But here there was no opening inventory. So 200 times 875, that's 175,000. So here I'm going to say 200 at 75 kwacha. Okay. So that's for the first transaction on the 2nd of May. We bought 200 goods, and those are the goods we have in our store. We go to our next transaction on the 5th May. We imported another 250 goods. We paid a total of 225,000 kwacha. So we want to find out what was the price of each good. So you say 225,000 divide by 250, you get 900 kwacha. All right, so we come on our stores ledger here, 5th May. We brought in 250 goods. Each of them costed 900 kwacha. We paid a total of 225,000 kwacha. Okay, so here, initially we have 200 goods. Now we brought in an extra 250. So in total, we have 450 goods. Right, 200 of them at 875. A 250 of them at 900. We put the total amounts here. So with this type of questions, you need to put your goods in form of batches or layers so that when the process of the last in first out starts, you know which goods to where to remove from. 225,000. So that's for the 5th of May. The next transaction. On the 12th of May, we sold 300 goods and we made 375,000 kwacha. So I want to know how much did you sell each good. So you say 375,000 divided by 300. Sold each good for 1,250. So this is where the last in, first out will start. We're going to see how the last in, first out plays. So the first thing, we come to our sales column, 12th May. Sold 300 goods, each at 1,250. Made 375,000. All right. So we had 450 goods. We've sold 300 of them, so it means we remain with 150 goods. Now, this is the last in, first out. So the goods that came in last will be the first to be dealt with. So these 250 goods at 900 kwacha, these came out last. So they'll be the first to be sold. All right. So all of these go. Since we sold 300, so all these 250 are going to go. 300 minus 250, of the balance of 50 goods. And the remaining 50 goods will be moved from this earlier batch here. So here, we're going to remain with 150 goods at 875. And we calculate the total value. 150 times 875, 131,250. Any questions before we continue? So again, we had 450 goods. We sold 300 of them. So it means we remain with 150 goods. Since it's the last in, first out, we deal with the goods that came in last. These 250 goods. We sold all of them. Right. Then after we get rid of this batch, we'll go into the next batch. All right, which is these 200 goods. And that's how we remain with 150 goods at 875. Yes. I multiplied 150 times 875. All right. Next transaction, 15th May, we imported 200 goods each at, and we paid a total of 220,000. So I'd find how much did each good cost. It's a 220 divided by 200. So each good costed 1,100. So we come to our stores ledger here, 15th May. Purchases, imports 200 goods. Each of them costed 1,100. And we paid a total of 220,000. So we had 150 goods. We brought in 200 goods. So in total, we're going to have 350 goods. Okay, 150 at 875. And then we've got 200 at 1,100. Go to our next transaction. It's 23rd May, right? We sold 300 goods and we made a total of 390,000. So I'll find out what was the selling price of each good. So you say 390,000 divided by 300. It's 1,300. So we come here to our formation. 23rd May, sales 300 goods at 1,300 each. We made 390,000. All right. So initially we had 350 goods. We've sold 300, so it means we remain with 50 goods. So it's the last in, first out. So the first batch we deal with are these 200 goods. All right. We get rid of all these 200 goods, then we move on to the next batch. All right. So to all these 200 go, there's a remainder of 100 goods. The other 100 goods, we remove them from this second batch, meaning we remain with 50 at 875. And we calculate the total value. So you're going to say 50 times 875. That's 43,750. We go to the next transaction. 27th May. Purchased 450 goods. We paid a total of 540. So just want to find out how much did each good cost. So you say 540,000 divided by 450, you get 1,200. So you come to the information here, 27th May, on imports, 450 goods, each at 1,200. You paid a total of 540,000. So initially we had 50 goods, we brought in 450 goods. So in total we have 500 goods, 50 at 875. Then 450 at 1,200. Yes. And finally, at the end of the month, 31st May, we sold 485 goods. We made 727,500. Want to find out how much we sell each good at? We're going to say 727,500 divided by 485. So each good at 1,500. So you come here on sales, you put 485, 1,500, total 727,500. So we have 500 goods initially, then we sold 485 of them. So again, it's the last in, first out. So we're going to wait first, 500 minus 485, that means we remain with 15 goods. So The first to go will be these 450 goods. All right, all of these are going to go. So 485 minus 450, 35 remaining. Where was I? Yeah. We get rid of this 450 first. Then the remainder we're going to remove from these 50 goods. All right, so 450 minus 485, 30, 35. The remaining 35 will remove from these 50 goods here. 50 minus 35 remain with 15 goods at 875. So we're going to do 15 times 875. 15 multiplied by 875, that's going to be 13,125. Yes. So this is the value of our closing inventory. And this what goes in the financial statements, the balance sheet, that closing inventory, and also in the trading account, that closing inventory. This is where they all come from. Yes. Any questions before we make? I believe there was a question we have to get the gross profit. So we have to make a trading account here. So any questions before we make the trading account? Okay, we need to calculate the gross profit. So we have to make the trading account. This is the same trading account from financial accounts. Remember, gross profit is sales minus cost of goods sold. Sales revenue minus cost of goods sold. And if you remember, the way we get our cost of goods sold, we first find the total cost of goods available for sale and we deduct the closing inventory. We're deducting closing inventory because you cannot make profit out of goods that you haven't sold. So this total cost of goods available for sale is when you add purchases and opening inventory. So we make our trading account. First item, sales revenue. How much did we make in sales? We come to our sales ledger and we total up these values. 375,000 plus 390,000 plus 727,500. 375,000 plus 390,000 plus 727,500. So we made 1,492,000 500. 1,492,500. That's how much we made in sales revenue. Next thing we need to tabulate is the cost of goods sold. So first things first, we need, as I said, there's no opening inventory here. So the next thing that we look for is purchases. If there was opening inventory, it would have been our first item and would have put it here. So we go to purchases, which is the next item. Purchases or imports in this case. So we add up this by 175,000 plus 225,000 plus 220,000 plus 540. So to get our total purchases value. 175,000 plus 225,000 plus 220 plus 540,000. We get 1,160,000. So basically, this is also the total cost of goods available for sale. Okay, if those opening inventory, we would have added it to this, and then we get our total cost of goods available for sale. But since there's no opening inventory, so this purchases value will represent the total cost of goods available for sale. Then, in order to get our cost of goods sold, we need to deduct the closing inventory. So say less closing inventory, which is 13,125. So say 1,160,000 minus 13,125, we get 1,146,875. So this represents the cost of goods sold. And in order to get our gross profit, we are going to say sales revenue minus cost of goods sold. So I'm going to say 1,492,500 minus 1,146,875. We get 345,625. And this is our gross profit. Yes. Any questions?